All right, everyone. I just want to quickly announce to every single viewer and investor that there's two ticker symbols towards the end of this video. So stay tuned till the end. One of them we've talked about previously, and the last one I've just added and incorporated to the video because I want every single investor to be aware of these ticker symbols. And I have a new one added on for the watch list going into this week. Now, it's consolidating. It could have a slight pullback. Don't get me wrong, but the lower it goes, there's two ways to look at it. It's going down, and that might not be an opportunity, or it's going down, and this is the opportunity. You have to do your due diligence and research, but there's a lot of potential going into this year for this sector and this stock. So stay tuned till the end so you don't miss information on this one. It's been growing exponentially and since November, and I believe there's room for more, but again, I'm not a financial advisor. You have to do your due diligence. So keep in mind, there's two ticker symbols to stay tuned for towards the end of this video. All right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel. Invest for tomorrow. To all the subscribers, welcome back. And I have a ticker symbol towards the end of this video that I talked about yesterday. So if you want to refresh on that chart, you're more than welcome to. But this is also for any first-time viewers and investors coming across the channel to be aware of that ticker symbol moving forward. So stay tuned till the end for the chart and reasons and what analysis are saying moving forward. They've upgraded their analysis ratings, so that's a good sign. They're pretty bullish, and also the consolidation has been broken out of, and it's heading to newer highs. So stay tuned to the end for that ticker symbol. So here we are with Nano Dimensions and Nndm. What a run. I bet the bulls are really happy because this ran up. It consolidated, right? And it ran up again. I mean, some big stuff here in the last couple of days. And here we are hitting new highs. So we're going to look at that in just a moment. But I do want to go over how ARK Invest has positioned themselves from yesterday to today in each ETF. So ARKQ, they had 6,560,937 shares. And today in ARKQ, they have 6,614,452 shares. That's a pretty nice jump there between those two. I mean, it was about 54,000 shares in total, but pretty nice jump in adding more to their position. They continue to average up. And for those of you that calculated yesterday how many shares to the market value and giving an average share price, I really want to say thank you to you guys. And the reason why I told you guys to do this, for those of you that commented, thank you. And for those of you that did it without commenting, thank you as well. You know why? Because by you doing this, you are aware of where they stand in ratio and comparison to where the stock price is currently. So they're not that far from the current stock price to what the total cost per share is costing them, even as they continue to average up. You know what that means? What that means to me, and it should mean to all of us as investors watching ARK Invest making bold statements after bold statements and just continuing to load up on shares, is that they see more room, because no one in their right mind averages up to end up their average being literally almost a few cents away from the total price of the share price currently. You know what that means? That their profit margin is getting smaller and smaller, because there is a point where they're going to cool off and they're just going to let it grow. They're just going to let it grow. They're just going to let it grow and let it continue to flourish from there. And then they're even going to continue to add on over time. But right now, the way they're loading up on stocks, it's because they see so much room here and they don't want to miss out on opportunity. And like when I saw how they were loading up here at $11, that was a big sign that they saw this run coming, that they saw room here for this to continue. And the fact that it ran, right? The fact that it ran, they have actually done a pretty good job here at positioning themselves at getting it at better prices before it went up to this point. Now, could there be a pullback in the near future? Probably, if there's another offering, which a lot of people don't want anymore, or some sell-off, some profit taking, but it's going to cool off the stock and there should be some consolidation within that area, and it'll continue to run from there because ARK Invest has been buying nonstop, whether it dips, whether it goes up, whether there's an offering, no offering, they just keep on loading up. So let's see here ARKW. So ARKW, right, yesterday the 21st, they had 4,027,219 shares, and today they have 4,077,509 shares. So that was a nice jump there as well of 50,000 shares. So in total, together, they've had over 100,000 shares added to their portfolio. Now, this one's moving upwards on the list here. And very interesting enough, from yesterday to today, Nano Dimensions has made it to the top 10. I've been talking about this since I saw it way down here. I've been even more confident saying it lately. I could see this being in the top 10, top 5 really soon. And the fact that their Alphabet Inc. as well has reached almost 100 million. It's going to be a little battle there between Nano Dimensions and Alphabet to reach the 100 million mark. Who gets there first to be in 8th place? But I can see Nano passing all of these, like we stated. And if the share price multiplies just by 3, like we talked yesterday, it could pass Tesla, and Nano Dimensions can be number 1 in RQ. That would be tremendous. So we need to watch this closely. They just keep on loading up on shares. They're close to 100 million in value. I mean, it's impressive. Impressive for sure. So I definitely want every single investor to be aware of the fact, if you want to really track, how much, per share it's costing them today, the total amount would be 6.6 divided from 95, or you can just divide 95 by 7 if you just want to round that up, or 6.7 if you want to round it up. You can go ahead and divide 95 by that, and it'll tell you what their share price, average share price could be. And it's always a little bit less or more than that, but it's pretty close, and it lets you know how far up are they. So let's see here our support and resistance. The first thing I want to point out is the 50-day moving average, 1282. As long as we're above it, we're in bullish territory. The moment we're below it, we're in bearish territory. Our support level is 1371. I want every single investor to write that down and keep that in mind. If that gets broken through, you want to see how this reacts between 1371 and 1282, the 50-day moving average, to see if the bears are tearing this down or are the bulls trying to reappear. On the other hand, we have our resistance, and it's literally the last share price, 1475. This is the highest we've seen Nano Dimensions, and it's the highest point of the day. What a bullish run in the last couple of days, right? Since the 19th. But I want every single investor to be aware going into next week that Nano Dimensions has to break 1475 to continue the run, not allow the 50-day moving average to catch up to the price, and also for this to go ahead and continue to work its way up to newer highs and new resistance levels. If the bulls fail to do so, the good thing would be for them to consolidate within this area, not have a pullback bringing them back down to $12 or $11. So either consolidation could be really healthy, or even healthier would be 1475 being broken through right now to continue this momentum and not allow the 50-day moving average to catch up to the price. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and forget to hit the like button to let me know you watch this video. Stay tuned till the end of this video because I have a new ticker symbol you won't want to miss. For everyone that has stayed to this point in the video, the ticker symbol I'm about to share with you guys is one I've been watching for some time, but it was hanging out around the same area for almost a month or maybe even longer. And I was just trying to see because things were looking kind of quiet, but analysis ratings were being upgraded in the last few months and weeks leading up to this point, and I wasn't seeing much movement, but they were stating that their upgrades, are forecast up in like 6 months from now, a year from now. And this ticker symbol, you've probably heard about it before. I highly suggest doing more research on it and doing your due diligence, but the ticker symbol is ZNGA, Zynga Inc. I don't know if you guys have heard about it before, but it was hanging around the same area. You could see some consolidation here within the $9 mark, and then also a little bit before that, it was around that area and it fell. So I was watching it. I was trying to see, are these upgrades really true? Are these forecasts possible? And now we're seeing it actually running up. So this is definitely one you want to add to your watch list, and especially since it broke out of this consolidation here. And instead of going in the opposite direction like we saw previously when it ran up to the $9 mark and it pulled back, it actually ran up to the $9 mark. It held pretty well, and it ran up now to highs here of about $11. Now, $11 is actually what analysis rating price targets are actually. They're rating it to be on the low end, $11, the mid end around 12 and some change, and the high end that I've seen, unless anybody upgrades higher than that, so far is anywhere between $14 to $15. Now, the fact that it ran up and it's pulling back, this is probably a good time to watch this and keep it on your radar moving forward, because it still has room to grow. Now, when I see those numbers of 11 plus, you could see the history of the chart. It was growing its way up, and it reached highs here of about $11.15. So anything above $11 are new highs, and they're going to be new resistance levels to be broken through. This is definitely one to have on your watch list moving forward. I've seen a lot of good things about it, and I definitely recommend doing your research and due diligence to then make a rational decision. But you want this one on your radar, especially now that I saw the consolidation actually get broken through. That means that this has momentum to possibly continue to run. Now, the reason why this broke through recently is because of good news. I mean, you're going to see articles pop up. They made it into India, I believe, and so forth. So they're expanding. But this company has a lot of potential moving forward. They dominate in their sector of internet software services, of games and so forth. And also, they're looking to expand internationally, which is going to be growth. And when a company's growing, its stock share should probably grow as well, and market capitalization over time. So very interesting. I definitely wanted to share this with you guys because I was watching it closely. It dipped. It started to run up. We were watching the consolidation. It looked like it was going down here at the beginning of January, back down to $8 and some change. But no, it came back, and it actually broke out of that area, those resistance levels up here at the high $9 mark and beginning $10 mark, and hit 11, and now it's pulling back. So you definitely want to watch this one closely moving forward. As always, if you found the video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share it with your friends and community. Don't forget to hit the like button to let me know you watched this video. And as always, thank you so much, and let's make some money. So for everyone that has stayed to this point in the video, the ticker symbol I'm about to share with you guys has been growing exponentially since November, and this whole sector has been growing overall. Now, there could be a slight pullback, and that could be looked as a pullback that makes you kind of stay away, or a pullback that invites you in because it might be an opportunity. Remember, I'm not a financial advisor. I'm not here to tell you guys to buy, sell, or hold, but this is a ticker symbol you want to keep on your radar moving forward. It's grown a lot, and I believe going into 2021, there's a lot of more room for it to grow. So the ticker symbol is CLNE, Clean Energy Fuels Corporation. A lot of these ticker symbols in this sector have been overlooked because a lot of people are talking about fuel cell. They're talking about plug power, Spark Energy, Blink. They're talking about all these different ticker symbols within this sector that sometimes there's so many that we overlook some of the ones that have been growing steadily. So here we are with CLNE with consolidation periods since November, right? And here we are with consolidation periods right now, even since the beginning of January, and running up, consolidating, and it looks like it might have potential to have another catalyst to run up again. A lot of analysis ratings are saying that this one can reach $12. I believe analysis ratings may have to even upgrade and reiterate that as this continues to grow going into 2021, and by upgrading it, it can continue to push this in that upward momentum. So I believe that is a possibility going into the year. But right now, what we want to look for is, will it continue to consolidate, or will we see a slight pullback? But if we do see a slight pullback, I mean, as long as it stays above 760 and even up here at 854, that could be a good sign that it's staying above these gains here that started this next run and consolidation, which in turn can tell us, okay, this is pulling back, it's holding itself up just a slight bit, some profit taking or uncertainty. This might be, like I said earlier, opportunity, or it might be a stock you want to stay away from. There's two ways to have that perspective and look at it. That's why you have to do your due diligence and research so that you can be better equipped as an investor to make a rational decision. So I want you guys to be aware that CLNE is one you want to keep on your radar and watch list going into 2021. It's grown exponentially already, but I believe there's a lot more room here for this one going into the year. As always, thank you guys so much for watching, and let's make some money.